Did you know that there's more to college savings plans than their typical 529 or even just your piggy bank savings at your local bank? What I want to talk to you today about is indexed universal life. And many of you think, why would I get life insurance to help my kids save for college? And it's really simple. You're creating a portal by which your child can start to accumulate wealth at a very young age while they're in the best of their health and take advantage of compound interest. What happens with indexed universal life is, unlike a 529, it's protected from the market. So it's never going to devalue. All of the money you've ever put into it is just going to continue to grow over time. Unlike a 529 as well, is we have a lot more predictability with what the return is going to look like because it doesn't devalue. See, what happens with a 529 or maybe some of your other savings plans is when the market goes down, that's a timing issue. And if the market happens to be down at the time in which that first payment for college is due, you might not have as much money as you had planned for that college expense. Here's another great reason to be using an indexed universal life policy for a college plan. Did you know that a 529, not so surprisingly, gets disclosed for FAFSA and you're expected to use it? In addition to your 529, if you as a parent has a retirement account like a 401k or a 457 or a 403b or a SEP IRA if you were a small business owner or a self-employed person, those also have to be used for college, and the government expects you to use those funds in order to pay that expense. One of the things that we don't think about is the fact that they also expect us to use the equity in our home to help pay for our child's education. For FAFSA, the indexed universal life gets disclosed, but because it's tied to probate, they're not allowed to touch it. If we start to put our money in an asset that we've repositioned into something that's going to grow without having the risk of market returns being not so great at the time in which we use it, that's protected from losing value and does not have to be used for FAFSA, you're going to better qualify for things like need-based scholarships, and you're going to be able to protect your assets from having to be double dipped. You might also apply and be able to receive scholarships that you normally wouldn't have been entitled to, all while still accumulating the wealth for your child. Now, we all realize that we have those children who are not going to be going to college. So what do we do for them? Well, the beauty of an indexed universal life policy is that unlike a 529, which has to be for a respectable trade school or for a college, we can use it to send them to go do an apprenticeship, to send them to go do a gap year, to send them to start their own startup. Maybe they're an entrepreneurial college student. We've seen that before. They can do anything. If they do go to a trade school and perhaps you have an old 529 or something like that, not to worry. We would still set up an IUL, an indexed universal life policy, and we would simply use it to help them start that business. Because what do you need if you're going to be an electrician? You need a truck, you need equipment, you need tools. We can help them use that indexed universal life to become a business owner at a much earlier stage. What if they're not doing any of that? Well, here's the thing. Unlike the 529, it's even more flexible than that. They can use it for their first home. We're not locked in, and that just is super powerful for your child. So the sooner you start, you're going to get that compound interest. It's going to grow over time, and you're going to create more assets that your child can tap into as they're trying to explore where they want to go in life without the pressure of, do I have enough money? Do I have the money in the right place that I can use it? You're released from all of those burdens, and you have the flexibility to make real-time decisions with your child when the time comes.